8 months ago, the value of all houses and units in Australia was $8 trillion. Now it's $9.1 trillion, more than the value of all super, the whole ASX and all commercial real estate combined, and the fastest rate of growth since at least 1989. Now, when the pandemic struck last year, the prevailing view was that residential real estate values could fall 20%. But in fact, the exact opposite happened. And note that the total was $500 billion in 2001, so it's up 18-fold since then. But guess what? Interest payments as a percentage of income have actually fallen from 8% to 5.5% because the RBA cash rate has dropped from 6% to 0.1%, which is, of course, the main reason prices have gone up. The periodic kerfuffle about the US debt ceiling is on at the moment, with the words shutdown and default getting a good run. Two things to note: no matter who's in charge, the debt always goes up and the ceiling is always raised. After everyone has a spell on the ledge, that is, looking down. The share market went up 0.7% today, mainly because of news that the Republicans had actually offered a deal on the debt ceiling. Banks and retailers mostly went up and resources stocks down. Petrol queues in the UK seem to be weighing on the London share market, which is down 1.2%. The biggest move on commodity markets was oil, up 2.5%, and the Australian dollar has kept rising against the Kiwi, even though they raised interest rates yesterday, which is interesting. The market appears to be pricing for a rate hike here as well, in stark contrast to what the RBA is saying. A fund manager told me this week that the market knows the RBA better than the RBA knows itself. And that's finance. Thanks for watching. You can check out more finance news by clicking there. And don't forget to click subscribe down there to get all the latest updates from ABC News.